Hey, good morning, everybody. Happy Monday morning. It's just after 10 o'clock on the 11th, and just want to kind of just jump right into the regular weekly update. Like always, I say this every time, and just as a friendly reminder, if you're one of the thousands, tens of thousands that are watching this live all around the world, if you have questions, comments, want to heckle me, whatever you want to do, throw them into the comments. I'll see them on my side live. Particularly if you've got a question or something, I will try to address it, at least kind of give you my thoughts on whatever you're asking. So there's always that, right? So jump in at any time. Otherwise, hope you are all doing well, and hope you enjoy this weekly update following what was a pretty quiet week last week, I think. No, all right, maybe not. Okay, anyway, let's just jump right into the more normal stuff. So we always like to start off with kind of the whole, hey, Jeff, how's the market? So here we go. If you recall, if you were with us last week, we saw a huge drop off in showings, lockbox activity on both sides of the river. And I made a comment about it's to be expected. It's that week over week change with the holidays and so forth. It was a ghost town. So, yeah, the cats bounced here at this point. So for the Oregon side, and this is every time Jeannie and I unlock a door to go show some people houses, it just registers this activity, right? So week over week, we're up 32%. And this chart gets hard to see because you're not looking at the far right data point versus the far left in terms of year over year. It's the far right versus basically the second from the left. So if you can kind of roughly see that as a bit of an eye chart for Oregon, I would tell you we are above pace for where we were this time last year. So whereas typically, if you kind of follow the way that chart measures, February is sort of the consistent start of the boom of our season. We're already there. So I think we had our 10-day lull of activity for the buying market here in Portland, and we are open for business again. So lockbox activity, 32% increase for the Oregon side. Washington, even bigger, 44% increase. So same kind of thing. They're above last year's pace. There's Clark County has been, I've got a couple of clients up there right now looking kind of all around the Vancouver campus area, and it's crazy up there. So, all right. So that's that. So I do want to kind of talk about, we shared some things that we want to talk about this year. I want to kind of break it down into a little bit of an encapsulation of where we're at right now, like things we're seeing in the headlines that sort of relate to today. I shared a handful of kind of key questions that I want to address today related to the market, kind of what's happening. It's just sort of questions that are at the forefront, I think, of everybody's mind. Certainly as we start the new year, certainly as we are wrapping up what was a crazy last year for the housing market. And then I want to get into, yes, some more thoughts of just some things that people are saying about what they expect for 2021 that are more of, I guess I would say, a particular interest. At least for me, as the way I look at the market and the way I make determinations of the health of things or warning signs or otherwise. And we're going to see if we can get through this week's entire broadcast without, let's see, I think last week we had the printer going off like crazy or people making breakfast in the kitchen, or we'll see how far we get this time before life happens. So, okay, where are we at right now? This is no big surprise for anybody who's out looking right now, but 54% of recent home offers were in a bidding war. And so, I can tell you, the one guy got the donut, so good for him. But it's a tough market. It depends on price points you're looking at. It depends on locations you're looking at, quality of home, reasonableness of pricing, and so forth. So certain areas are highly, highly competitive. I would say if you're looking probably below the 500 range, it's what I kind of jokingly tell some of my clients of you're in the hornet's nest of affordability and first-time people. So there's a lot of bidding wars that are happening. I think it's going to continue to happen. I'm even seeing some instances of homes where basically the listing agreement or the listing basically says this thing's going to sit on the market for the next 3 or 4 days, and then we'll compile all our offers, say Sunday evening, we'll review them on Monday, and then a day later they mark the house pending to say we're done, which tells me somebody probably came in significantly over asking price, all cash, but you got to take it today. And yeah, they did, because now there's no appraisal risk and you're just done. So there are times it's a bit crazy. So what are you going to do, right? So, all right. So that's no big surprise. Bidding wars, you see that in the press. I can tell you it's absolutely true. Not every time, but it is there quite a bit. Interestingly enough, they're talking about there's a little bit of pessimism that's coming up related to kind of that secondary surge of COVID, kind of the double dip of the wave. Plus now you've got kind of other follow-on stories of, I think, the UK and France or somewhere, talking about kind of seeing a sort of a derivative strain of COVID that they've identified, and whether this thing is morphing and becoming something new. People are getting freaked out. So the percentages are still favorable in terms of, do people think it's a good time to sell or a good time to buy? But they've downgraded a little bit, but still in kind of that positive territory. What I would caution you on stories like this is, yeah, they're pessimistic, but about the market because of COVID. Well, and they were this time last year also, or almost a year ago. And look at what happened. So I kind of downgrade stories like this here quite a little bit, but we'll see what happens. As a follow-on on that one, the part of that story, they're kind of talking about these rates may surge, and talk about mortgage rates, and it kind of went on to talk about another reason for pessimism is because that everything had been pushed so high on prices and everything else. And some people are waiting for mortgage rates to fall, and this is basically just saying, I don't think that that's happening. And so we'll see that theme kind of repeat a couple times about mortgage rates not dropping off. So there's that. I will do a kind of quick reminder, if you are watching this live, if you have any kind of questions, please feel free to put them into the comments. I will see those live, and then I can do my best to help you out. So anyway, all right, let's just jump back in here. There's an article that came out talking about the housing report, and the number of homes for sale hits a new low, which we've talked about this, right? The inventory is down nationwide, but some of the interesting parts that this article got into, they're highlighting that they're hinting at a recovery as new listings improve. But they're saying inventory continues to decline, right? So there's been a fever pitch of buyers. Sellers are starting to come out of the woodworks, but we're still somewhat imbalanced, mainly because the pace of home sales stayed strong through the holidays, and we saw that. We saw 1 week of dip in activity of lock boxes, and meanwhile prices are just going to the stratosphere. So there is always that. All right, so I'm going to pivot here a second because I've got a little bit of a slide issue here because we've got some things are not loading correctly. But all right, well, a little bit of technical difficulties here. I don't think it's going to pop up. It's not. So all right, well, here we go. The first cool slide, if you could see it, basically it's just, we're going to get into those key questions I was raising. And the first one being, how do we know this is not going to be another housing bubble? Or is it another bubble? Is it going to turn into a bubble? That's the biggest question on people's mind right now is, are we headed for a bubble? Is it going to burst like we saw last year? And unequivocally, the answer is no, right? So there's simple reasons why, and we'll get into some stuff here. First of all, this is a supply and demand driven thing. And this is coming from a well-respected national economist. And he's reiterating, this is a supply and demand issue. This is not about a speculative market like we saw back in leading up to the Great Recession. We've got people, and this is not all, but this is largely because of COVID. You got people working from home. You got kids are doing school from home. You've got millennials have entered the market. So now you have a surge of buyers. People want or need larger homes. And by and large, we have constrained amounts of supply nationally because of the Great Recession. So whereas we had a bubble previously, that bubble has now created a crisis, right? It doesn't create another bubble. This is a crisis, I would argue. Meanwhile, lender discipline has stayed significantly high. It's still very difficult, not difficult, but it's more restrictive to get a mortgage than it was back leading up to the Great Recession. So we're not seeing kind of that free, cheap and easy credit. You actually have to have a job this time. You have to have income and documentation. You have to have your ducks all lined up. It's still very doable getting a mortgage, but there's discipline to it. It's not like what we saw previously. And then what I thought was sort of interesting here, because it shows kind of this interesting parallel of a couple of different things. So the two different lines, it's homeowner equity or kind of the total value of things. So just kind of following the trend line, if you will, of the lines. In this case, let's look at the kind of the darker of the two and the lower of the two lines. That's your homeowner equity. The bar graph portion at the bottom, that's your outstanding mortgage debt. So if we look at leading up to the Great Recession, and the recession is shown in the little gray bar there in the middle, you see where the mortgage debt balances stood. Okay, so you've got that at a certain level. It dipped down because home values tanked, foreclosures, and so on and so forth, right? But then now you've also had a wave of collapsing of mortgage rates, people refinancing, paying down debt, so on and so forth. If you fast forward to the far right, that mortgage debt is really kind of on par with where we were around the time, sort of the peak of the Great Recession period, or leading up to the Great Recession period. But if you look at what home values have done, and thus the homeowner equity, it has skyrocketed since then, meaning that's your insulation against foreclosures of your home. If something happens, you lose your job, your hours are cut, COVID, things like that, you've got equity in your home you can tap into to keep yourself afloat. You don't just collapse and end up losing your home. You've got that buffer. So again, do we have a bubble? Absolutely not. It's just not going to happen. So that's kind of our good news there. So take this down. I got all kinds of slides here that are just not populated for me. All right. So what happens when the forbearance ends? It's honestly what's going to happen when forbearance goes away is a lot of these people are going to exit the forbearance process with mortgages intact. This was a big, scary story for most of last year, because the question on everybody's mind, including people who were servicing the forbearances, was, how does this work? What are we doing, right? Are we just going to basically pause your payments, and then all of a sudden in 90 days, I'm going to give you 90 days worth of payments, you've got to pay me on the spot? Or do we put it on the back end of your mortgage? Do we modify your mortgage? What are we doing? And since then, people have been figuring this out. By and large, I think a lot of people are just having missed payments tacked onto the back end of their mortgages, somewhat penalty free. And others are they've worked through it. They've gotten back to work. Their hours are back up. They've landed back on their feet, and we exit the forbearance process. So there will be some foreclosures coming, but it's not going to be. There won't be a surge. The one area where some of these national economists are talking about that there might be a surge in forbearances would be in areas that have low growth in the value of their homes, or in high tourism areas. So what they talked about is if you're in places like Mississippi or Louisiana in particular, they called out, or Hawaii or Nevada, those areas you could see a pretty good pop in foreclosures. Will it be enough to really tank the markets, the local markets there? No, but you're going to notice them somewhat. But basically, it's not looking like it's going to be a super significant event here, right? So, all right. So, next question that we'd pose are, what are the wild cards for 2021? And there's one big wild card for this next year that I think could really come factor in, because everything else I think is going to be kind of somewhat steady state. Let me do a quick pause again, because there are some people watching now. If you have questions or comments, put them in the comments on the Facebook feed. I'll see them on my side. I'll answer your questions best I can. So, all right, so back on it now. The wild card for 2021, the biggest one that can come out to it is new construction. Housing starts are picking up. They're picking up significantly. They're forecasted to pick up dramatically over the next several years, which is good. We need that. We need more homes. I think they were up like 11%, 7 to 11% this past year. They're supposed to jump even more significantly, even beyond that. In the case of this bar graph, all I really care about so much are to the left part are the darker bars, and to the right part, kind of the olive green ones, because that's your single family homes. Multifamily starts, I don't really care about that. It's just more apartments and things like that. And that's not what I think anybody's tuning into these broadcasts to learn about. So I just don't cover multifamily very much. So I think single family homes are coming, and I think that's going to be the big thing that's going to start to move. The construction starts even in the Portland, Vancouver area. I've shared previously, those are trending up. So we will start to feel the effects of those coming up. Whether we feel it that much this year or not, we'll see. But what I think you're going to see happening is home builders are going to be even more in advance publishing out buildings that are coming, planned developments that are coming, taking reservations now, and basically kind of pre-selling future builds. And I think there's going to be a strong market for that, if nothing else, so that buyers can look at it and say, you know what, I don't have to compete. I can just kind of lock it in and be done. So we'll see what happens. Oops, I already did that one. All right. And then I think we kind of posed the question of, so could the 2% mortgages really, could that be the mortgage rate for years to come? And that's the $1 million question, right? Because that's a big part of what's kept everything afloat. Not so much as it relates to affordability, but sort of as an offset to the affordability crunch is how long will rates stay this low? What's going to happen next year? I mean, everybody wants to know. Everybody pings their favorite mortgage person saying, what's going to happen? And nobody knows. But if we look back through the 1980s, your average mortgage rate was in the 12s, which is, let's just let that sink in, a 12% mortgage rate on average, which is awful. In the 90s, it was in the 8s. In the 2000, your averages were in the 6s. For the 2010 decades, you averaged in the 4% range. And so far in the 20s, we're in that 2% range. So there is a steady and pronounced degradation of mortgage rates outside of any of the macroeconomic things that have been happening, right? So good cycles, bad cycles, recessions, mini depressions, so forth. This is just a hard trend line that's kind of hard to get away from. So if there's a recovery coming, I think there probably is. I don't think 2 is going to be where we're going to be long term, but I think it's where we're going to be for quite a while. So where the 2020s kind of averages out to be, by the time we're all said and done, probably more like in the 3s, but all signs are kind of pointing that for now we're on track to be in the 2s for quite some time to come. So let's start talking about 2021. Kind of what are people predicting? What are they expecting? And I hate the word prediction because it sounds like it's just kind of a guess, because these are all backed by economists and people who study this stuff far more than I do. But obviously they're expecting another strong year for this year, right? We're already seeing it. The big thing, and I think this even missed my radar during the election cycle, but I guess Biden had talked about he wants to do a home buyer tax credit, which would help cover home buyers' down payment costs. How that's going to work and what this is going to look like, I have no idea, given you're going to have, say, home values on averaging in the 550 range here in the Portland metro area, or, Des Moines, Iowa, where it's, I don't know, whatever it costs to buy a house in Iowa, $80 or something. That's a significant difference in your down payment amount. And so I don't know how you normalize that or rationalize that. But if there's something coming that's going to help first-time buyers, this will be huge. And look for that to be even a bigger spark on demand, because like I said, we've talked about this previously, your millennial wave coming through is way bigger than the baby boomers that are exiting, with a lack of housing already. With what I think everyone's going to recognize of the chance of a lifetime for mortgage rates, I think you're going to have a lot of people looking at a jump. And if this can help, it's going to be even worse in terms of the inventory pressures that we're facing. That's why I just think inventory stays a problem for, I think, this entire decade. But let's just see what happens. And then obviously they're predicting a robust sellers market as prices keep going up, which we've seen that for 100 years now, or it feels like 100 years. But the glimmer of hope here is inventory is looking to make a slow and steady comeback, which is going to give some buyers some relief. And we're going to talk about that here a little bit more, but definitely there is some relief coming. I think everybody is seeing it, probably back half of the year, but it's definitely coming. So, and then this article came out, I think this is a Zillow article, that 2020 was surprising. I don't think any of us foresaw what happened last year in the housing market. And they're basically saying that next year is going to be even crazier, and I think they're probably right. So then they kind of went into, let's kind of expand a little bit more as to why, right? So here's some of their projections where they think 2020 is going to wrap up for home sales once all the data is aggregated. And if you look at the far right, and the projection for next year or this year, I guess, is a significant increase. And I will tell you right now, being in the business, 2020 was absolutely ridiculous in housing. So for it to show that scale of a projected increase for this current year, it's exciting. It's interesting. It's a little terrifying as well. So we'll kind of have to wait and see what happens on that one. But it's kind of good stuff here. And then they start looking at the home values are looking to grow by double digits basically through the end of this year. So they start showing a little bit of a trailing off latter part of the year. Some of that's going to be seasonality. Some of it might be a cooling effect. Some of it might just be fatigue. Who knows? But Zillow's calling the shot, double-digit growth for pretty much this entire year. So we'll see if that holds up. If you are a home owner, good for you. You're building material wealth. If you're buying your first house, good for you. You're making the best investment possible. Double-digit housing growth, put that against your stock market returns any day, right? And we can talk about this offline. Gene and I have helped talk to a lot of people about the differences between putting investment money into real estate versus in the stock market. And even if you factor, say, a 10% return in the stock market, which you're probably not going to get consistently, versus a degraded return on real estate, it's a much better play simply because of the leverage, right? You're putting in a smaller return or smaller, growth on a huge asset versus a much smaller one. So if you have questions about trade-off between the market and housing, ping me, because we've got a great way we can show you that trade-off there. And then lastly, this is just a great little blurb. This is part of that Zillow article that hey, this could create headwinds for housing affordability. Yeah, of course. Saving for a down payment remains everybody's big challenge. Yeah, of course. Factor in now Biden talking about he wants to do some tax credit, however that's going to work. If it does, then that solves that key problem. But then they said, so back to kind of the glimmers of hope for people who are off looking to buy, that those rising prices are going to encourage more people to list their homes and capitalize on those gains. And let's lock in that gain before anything maybe pauses, slows down, take chips off the table, especially those people who say, I want to sell and I want to move down a scale. This is your time to move. And we've got a few of those who are looking to do that this year for us personally. So we're going to see that happening. So, and then they talk about with that, then they're expecting inventory to pick up and see an increase beginning middle of this year. I think that's probably right. I was hoping we'd have the December market stats in time for this broadcast today. They're probably going to come out this afternoon or tomorrow at the latest. I'm curious. I'm dying to see what the December inventory level was. With the pause for Christmas and New Year's, I wouldn't be surprised to see inventory go up, 1.2 months or something, which is still stupidly low. But given what we're seeing for January and the surge and what's already people coming flooding out of the gates, if we then snap back to sub 1 month of inventory, I would not be surprised. I think it's just going to be a crazy year. But kind of your key takeaways here: this is not a bubble, right? It's we can demonstrate 1,000 ways this is not going to be a bubble. It's going to stay tight through this entire year because of supply and demand. We just can't fix the supply piece well enough. We know mortgage rates are going to stay low. We know the demand is going to stay sky high. But we also know as the vaccines roll out, as people get more comfortable with the COVID scenario and we get improvement on COVID, we know we're going to see more homes hitting the market. We'll see some more buyers coming out as well, but I think they're already out in most numbers. But we're going to see inventory improve. I don't think we're ever going to see 2 months of inventory this entire year. So, and again, 4 to 6 is sort of a balanced market. So we're going to stay hot for, I think, quite a long time. People ask me all the time, what are my long-term predictions? I think we're going to see south of 4 months of inventory probably for at least the next 5 years, 5 or 6 years, which means solid growth on your property values. Solid demand long term. I think it's a remarkably good investment to be buying a house in the Portland metro area. We are one of the last affordable major cities in the West Coast. We have nowhere to go but up, and we've seen that lately. But there you go. That's your weekly update. I appreciate you guys tuning in, watching. Those of you who shoot me comments to the side after the fact, I appreciate all the love and support. If you guys have any questions, if there's anything else you want to see out of these weekly updates, let me know. Always looking for improvements. If you want me to get more dressed up or wear a tie or something, I won't do that, but I can tell you I would. But all right, there you go. Happy Monday. Enjoy your week. Stay safe. Take care.